Hello, everybody. Welcome back to my YouTube channel. And we haven't been releasing any videos. So on today's video, we are going to focus mainly on the Asian session and the ICT London kill zone. Okay. Now the ICT London kill zone starts at 2 until 5. Okay. So that is the ICT London kill zone that we are going to use. All right. So the first thing that we should look at when trading this method, we are going to use one is the Asian range. Okay, that is the first one. So the Asian range is this point to this point, meaning that we are going to focus on the Asian low and the Asian high. This is our range. Okay, this is our range. So that is what we are going to be focusing on. That is the first thing. Okay, and now the second thing we are going to focus on is the fair value gaps in the market. Now, I think the second one should be your break of structures, your change of characters. Okay, those are the confluences you need in order to trade this. US or CH, which is going to be our change of character. Okay. Now, thirdly, we are going to look at fair value gaps and volume. Okay. Now we'll talk about the volume once I start explaining each and every confluence that I'm mentioning right here. Okay. The third one will be our fair value gap, which is FEG. Okay. Now, why do we trade this range, the Asian range? Now, we believe, actually, it is believed that the Asian high or the Asian lows have what we call liquidity. Now, this liquidity is generated by what? It is generated in order to trap traders. Now, these traders are trapped by the big spenders, the banks, the institutional traders. Now, how do we get trapped as retail traders? Retail traders use buy stops above the Asian high, so that the moment price hits those buy stops, what happens? Price goes up a bit, gives them a little profit. Some will be moving their stop losses to break even. Okay. Now that they are trapped, what is the market maker gonna do? The market maker is going to reverse price to take out this buy stops. I mean, these stop losses that the retail traders have. Okay. Meaning that if you move your stop losses to break even, all that will be cleared the moment price rejects. Okay. And again, all these buy stops must have stop losses below. Now, look at what price did after taking out this Asian high. Now, this doesn't happen every day. Most days, price can take out the first low, which is the Asian low, right? Go back up, take out the Asian high, retrace a bit, take out the stop losses, and continue moving up. Now, that will depend on the nature of price action or the market structure on higher time frames as well. Okay, so that is one of the things that you should consider as well. All right, you should consider price action. You should consider market structure. Now, your market structure should be based on the higher time frame, because you cannot use the lower time frames to indicate whether the market is bullish or bearish. Okay, that is going to confuse you, and it's going to delay your trading journey. Okay, so as I was explaining the buy stops, the Asian high and how liquidity is generated there. Now we do the same with the Asian low. Okay, the Asian low has sell stops. Now, once price hits all these sell stops, what happens? We will have traders who have stop losses just above. Okay, now price hits those sell stops, gives them profit. They move their stop losses to break even. Now, not everyone is going to move their stop losses to break even. Okay, some will just leave their trades running to give them a little to boost their confidence that okay, maybe price will just give us a little 20 to 30 pips move after breaking out the Asian low. Okay, they'll just leave their stop losses up there. Now look at what happens. Price rejects, turns to the upside. Okay, now our job as smart money traders is to look for a shift in the structure. Okay, now let's identify the structure from this Asian low to the Asian high. Okay, we are bullish. We have high highs and high lows. Okay, we have this high high, we have this high low. Okay, price goes up, creates a high. Okay, now we have a shift in structure. Okay, now that shift is caused by high volume, and that volume is caused by what? It is caused by all these big spenders, all these banks and institutional traders. Okay, now what do we do after we get a break of structure or a change of character? We should look for a fair value gap. Now we have a fair value gap right here. Okay, but I wouldn't recommend you to actually trade this. I would only recommend you to trade this if a low or a high has been taken out. Okay, for example, we have this Asian low taken out, price rejects, and it breaks structure. Okay, so after price breaks structure, what happens? It left this imbalance right here. Now, down here, there is no significant imbalance or fair value gap. Okay, so meaning that our entry would be at this fair value gap and our stop loss would just be below. But for more safety reasons, you can put your stop loss just below this low right here. Okay, that's only for safety. All right, so let's continue. Now, as I was explaining, you should look at the structure between these 2 points. Now you see that we were bullish, now we turned bearish. Okay, since we turned bearish, we should be looking at how many fair value gaps can you identify from this move to the downside. I only identified 2, which is this first one and the second one. And you should look at how price was actually reacting from these fair value gaps. Okay, here's what happens. We had that break, price went up, filled all this imbalance, dropped. Broke structure, left imbalance, imbalance filled, now we have a drop. Okay, meaning that the market is now bearish. Okay, so when the market is this bearish, what do? We look for price to change direction. Okay, so meaning that we will be looking at this Asian high and this Asian low. Okay, but then our main focus here would be this Asian low for price to take out all the sell stops, the stop losses, and continue moving up. Okay, so your main focus will be getting a change of character, a fair value gap, then you execute. Okay, so at this point, I do not believe that I would trade this fair value gap. We do have this, what do you call it? We do have this order block up here. But for me, since this was caught, I wouldn't trade this one. Because if we look at it, we have this change of character here. But look at the volume. The volume was not significant. There is no fair value gap. The fair value gap only appeared after price has done all these crazy moves, leaving no imbalance. So for me, this would not be enough. But there's some people who can take that. And I'm not saying that it's wrong. You can risk that 1% to see where the price will take you. Okay, but for me, it's not that significant. It's not enough. Okay, so that's it for this video, guys. If you have any questions regarding the Asian high or the Asian low and liquidity and all that, please make sure that you leave your comments below. And yeah, I will see you guys on the next video. And again, I have a broker that I recommend, which is Cedar Forex. I think you guys have heard about it. It actually offers USD accounts, GBP, and a lot more. And also it has like low spreads. With this one, I'm certain that as smart money traders, we do need it because of the low spreads. It is fast and convenient. All the withdrawals, you get them same day. Your deposits, they reflect very same day. Okay, so just give it a try, guys. I don't know how you're gonna love it, but for me, I don't have any problem with their trading platforms as well. Everything is top notch. Okay, just make sure you open an account. Hit me up. I might have something for you. Okay, and good luck.